So why do we trade options? Well, there are quite a few benefits, actually. One of the first benefits we'll discuss has to do with leverage. Options provide the ability to go ahead and invest in other things with limited amounts of capital or cost to us. You've probably seen with the markets being up so high that there are many stocks that, quite frankly, might feel like they're a little bit out of our range, if you will, as far as our cost for those stocks. Now, while it is possible that you could certainly buy one or two shares or even fractional shares of stock and still be able to have the opportunity to make money, it's nice to know that we can still use options to have control over larger values of stock without having to put up a lot of our own money at risk. Another benefit, though, is that we have defined risk. Now, you might have heard somewhere that options are very risky and we should stay away and they're too dangerous. Well, it is true that many option strategies certainly carry some risks, some more than others. But the way around that is to make sure that we understand what those risks are. And actually, the strategies that we'll be teaching you in this course have very defined risk. So in other words, you'll know exactly what are your maximum losses or maximum risks before you even enter into the trade. The key is to make sure that we're educated, that we understand and have the knowledge first before attempting to do any live trades. Another great benefit is the flexibility. Let's face it, markets and stocks don't always go straight up like we'd like them to. They go sideways, and they certainly can go down. The beautiful thing about options is that we have the flexibility to be able to make money in either direction, up, down, or sideways as well. So we can use options for growth, for speculation, whether it be short-term or longer term. We can even use options to help reduce risk by using certain strategies to help hedge and protect the current assets that we have in our account already. Another favorite thing about options is that we can use them to create income in our account, applying different option strategies that we'll show you as well. Let's talk about this in a little bit more detail. First of all, leverage. Basically, it allows you to control a greater amount of an underlying security, such as a stock. In fact, better yet, let's just go ahead and show you. I'm very big about not showing so much in slides, but actually walking through and showing you firsthand. So what I'm going to do is share with you my desktop and bring up what's referred to as our Thinkorswim software. This is a software that's provided by TD Ameritrade. It's available to anybody to download and use for at least 60 days for free. We happen to use this for our teaching because they provide a paper money account. Now, it makes no difference to us who you might trade with. There are many great brokerage firms out there. We don't endorse Thinkorswim or TD Ameritrade over one broker over another. But just keep in mind that any examples we look at here today, they really are just for educational purposes, just to help you to learn. They're not recommendations at all. Right now, I wanted to bring up a stock like Microsoft, symbol MSFT. And currently, I'm looking at the charts where I'm looking at a 6-month graph. And you'll see that for the last 6 months, Microsoft has actually done very well. It's had ups and downs, but it's been moving up higher. Well, recently, back on June 7th, I went ahead and purchased 20 shares of the stock at $252. Basically spent just a little bit over $5,000 to buy just 20 shares of the stock. The stock, thankfully, has moved up higher, but at the same time, while I was investing in the stock, I decided to go ahead and buy a few call options. Now, a call option is a very bullish strategy. It gives us the right, but not the obligation to buy shares of stock. But we'll see how, because the stock has moved up, we've made money on not only on the stock, but also on the option as well. So I'm going to share with you my monitor tab where we can keep track of our positions. I've got quite a few here. But I'm going to go ahead and find Microsoft and expand that. So I've had other shares here from before. But as I look at the summary right here, you'll be able to see that this is the trade we made back on June 7th, where we purchased 20 shares. Thankfully, it's up just a fraction, if you will, about 5%. And if we were to sell that today, we would have a gain of $272. Now, again, 5% return over but 2 or 3 weeks worth of time isn't too bad. But remember, at the same time, I also purchased a call option. I bought 2 contracts, and we paid $18.15. Now, today, if I were to sell those same contracts, we'd be able to sell those at $27.65. So that resulted in a $1,900 gain if I were to sell that today, which equates to a 52% return. Well, just to do a quick comparison, I created some notes about these trades, where one, if I purchase shares of stock, look how much money I'm having to spend, $5,000 for only control over 20 shares. Still a 5% gain, nothing to complain about. But look what happened when I purchased the option on the same date, same time, is I actually spent less of my money, $3,600 versus $5,000, yet came out with a much larger percentage return on the risk that I took and made a $1,900 gain. Well, this is that power that you have with leverage. This is exactly the power that you have in trading options, is it allows us to potentially put less of our money up at risk, but have potentially larger percentage returns and even dollar percentage or dollar returns simply because the stock is doing what we anticipated it to do. Now, you might be wondering, what are the risks? Well, this is defined as well. Whatever I paid for that option, that $3,600 and change, that is my maximum loss. I cannot lose any more than that. That is my maximum risk on this trade. Do I have to take that maximum loss? Absolutely not. We'll have some very specific guidelines that we can follow to help us reduce that risk and position size correctly so we can minimize our loss on that trade. That's just one of the huge advantages. Yeah, so I come back. We also have defined risk. As I just pointed out, we showed you exactly what our maximum loss would be on that particular trade. But note, it's important that you learn and be aware of all the risks involved with any option strategy before you enter the trade. So as we walk through some of these sample plans, make sure that you follow them and understand the risk before entering into the trade. Another huge benefit is the flexibility. So we pointed out, you can trade whether markets are going up for being bullish. If markets are going sideways, it's possible to generate income on some of your stocks through some neutral sideways types of strategies. We can also make money intentionally if things fall down. How great is that? That if the markets are falling, you don't have to sit there and take it. You can trade with it and actually be able to have the opportunity to make money if things fall down lower. Yet, right, one thing to keep in mind, though, is that options are a derivative investment. What that means is that an option's value is derived specifically from the price of that underlying security, from the stock, for example. So an options movement is dependent on the stock movement. Let's just show you what I mean by that. As I come back into our account again, you notice that we bought into this particular trade, not arbitrarily. We didn't guess. There were very specific reasons why we entered that trade as we did. But not all trades go like that. For example, around that same time, I went ahead and did a sample trade on NTAP, NTAP. And also I bought in right here, 50 shares, around $80 a share, again, spending about $4,000. The stock went up. Then last week, it actually came down a bit on me. Fortunately, today and yesterday, it started to bounce back up. So we're a little bit higher than what we paid for the stock, just by 25 cents. So as I come in here and look at that, I'll bring it up down here now. You'll see that we're currently about breaking even. We're up about $12. So it's just a fraction of a percentage point. On that same date, though, where I purchased the shares of stock on June 4th, I also went ahead and bought some option contracts on that same date. In this example, we spent just over $2,900 on that trade. What's interesting, though, is that even though the stock is a little bit higher than where we bought in at, and I'm just breaking even or so on the stock, notice that as of today, I have a loss, a little bit of a loss on the option. In fact, I made a great deal of that loss back up just today alone. This is what happened as of today. So unfortunately, right now, I'm losing a little bit on this trade. The nice thing is, though, is I still have a defined risk. I know exactly what my cost is on that trade. I can't possibly lose any more than that. But I bring this up to point out to you that, yeah, we're going to have winners and losers. It works both ways. But it's fascinating to see that we're actually losing a little bit, even though the stock is moving in our desired direction. Why is that? Well, there are more variables involved with an option than just the stock, as it is possible to lose even though things are going the right way. So it's very important that we understand how to read and recognize the movement of the stock, because that'll directly translate into our options trading. I bring this up specifically to point out that in order to be an effective option trader, you must be an effective stock trader first. So I encourage and challenge all of my students to go out and get practice in investing and trading in stocks. Recognize and learn and become familiar with how these stocks move. Make sure that you understand technical analysis that we'll also discuss in these lessons as well. Yeah. All right. Well, once again, these are the great benefits, and you've been able to see today how and why we like to use options for our trading. A lot of wonderful opportunities that we have available for that. So I want to let you know that these will be the strategies, among others, that we'll be talking about in this course. We'll show you how we can go long calls, which means when we go long something that we're buying. So if we purchase calls, We can buy calls for a shorter term trade, what we call swing trading, where we're just after a short term profit. We can even use call options for trading in lieu of the stock and make money for a trend trade. We can intentionally buy puts to make money to the downside. We can also use puts as protective measure to be able to hedge and protect our individual positions as well as our portfolio. A favorite strategy is being able to trade covered calls. What a great way to be able to generate income on existing positions that you might already own, as long as you have at least 100 shares of stock. Another income strategy is being able to sell cash secured puts. This allows us to make money on the stocks that you're already curious about owning to begin with. All right, so these are the things that you'll be learning about and then some. So I look forward to working with you and certainly encourage you to progress forward in your education. And I want to congratulate you for being here, and we're excited to have you continue to learn more about how to trade option strategies.